Hello, what's up, guys? Thank you for tuning into the Token Metrics YouTube channel. In this video, we will go through this week's most popular coins from our customers and try to come up with some good analysis regarding these coins individually and then as a whole in a portfolio. We won't be doing any price predictions in this video, but if you're interested in some realistic price predictions on these coins, please make sure to check out Forrest's video on our channel. So, this week's most popular coins on the Token Metrics website were Bitcoin, Ethereum, Cardano, Voyager, and Terra. So let's start with Bitcoin. So our quant team at Token Metrics built a logarithmic regression model that is good at capturing long-term support and resistance levels, especially for coins that have relatively a good amount of pricing data. So from this Bitcoin chart goes back all the way to 2011, and we can have some very nice observations from here. For example, we can see how each market cycle has some significant properties. For example, the first market cycle after the big downturn, we found resistance in this purple range, and then during the next market cycle, this support range shifted up towards the red range. And then the most recent market cycle of 2017, 2018, we also shifted a support range towards the blue range. And also we can notice how historically this green range has been a good top signal or bubble signal, as people like to call it. So from this chart, you can also imagine that if Bitcoin uh, eventually was able to break off of this 50K resistance level, it could well be heading towards that $130,000, $140,000 price, and could start raging within this range from 140 to $50,000, and could be able to find support, future support on that $20,000 range level. And now let's look at our quant team's technical indicator. So we built this model that gives us buy and sell signals. And from this signal, we can really see how powerful it could be, especially here is a good example where we sold right before the March 2020 COVID crash. And so we reduced our risk and our loss by a lot. And another good property is that we have been long Bitcoin since October 2020, and we have been long ever since. Although we had some market corrections here and here, our indicator didn't flip and didn't give us a sell signal. So that is good. And so essentially, we are still the model is still bullish on Bitcoin. Now let's look at ETH. And just looking at the same logarithmic model as before, some similar observations can be made in terms of support levels shifting up with more market cycles. And another interesting thing we can see here is that ETH is yet to reach that top level that is represented by the green range. And also something interesting to think of is you can say that Ethereum might be undervalued compared to Bitcoin because it still didn't reach a top in price, and you can very well reach the $2,800 or $3,000 level during this market cycle. Now let's look at our technical indicator for ETH. Also, similarly, we had a good sell signals during market downturns, and also good buy signals to catch huge rallies, which we have been long ETH since also October 2020. And although we had a sell signal here that was kind of a false signal, the model readjusted quickly and turned back to bullish. So now the model is still bullish on ETH. Now let's look at Cardano. And first keep in mind that with more data, the more pricing data, the more accurate the models become. And Cardano doesn't have as much pricing data as Bitcoin and Ethereum. That being said, we can still observe some interesting similarities here, like the fact that the red range has been historically a support range, and that we are currently in the green range, which could signify a top at around $1.67. And looking at our technical indicator, we can see how our indicator has caught that rally very early on in November 2020 and has been long ever since and never sold. So it's still long Cardano even till today. Now let's look at Voyager. And Voyager and Terra don't have enough pricing data to be confident in the logarithmic model. They're still relatively young coins. And since that is very relevant in crypto, you have so many coins coming out that don't have a lot of pricing data. Our quant team developed an automated resistance support levels model that is for short-term coins, and that will be available very soon on Token Metrics. So from this chart, we can see that Voyager reached the top at $7.23 and failed to break out from this level, and that it found support at $5.27 and is currently ranging within this range. And now let's look at our technical indicator for Voyager. Also, very good buy signal right at the beginning of the big rally, and it's still bullish ever since January 1st, where Voyager was in the very low cents in terms of price. Now looking at Luna. Luna has been on a rally recently, although it had ranged between $7.2 and $5, and currently very recently reached a top of $12. So we can imagine and say that this 7.2 level that previously was a resistance can flip and become a support level for Luna. Now looking at our technical indicator, also the same. We are still long Luna and still bullish. Didn't sell at any time in this rally. And we have been long Luna since November 2020, also when the price was in the cents. All right, to recap, we have seen our resistance supports models and what our technical indicator is saying for these 5 coins. And the technical indicator is still long all of these coins. But now let's consider a portfolio of these 5 coins. So using our quant team's portfolio optimization model, we can construct a portfolio that theoretically optimizes the trade-off between risk or volatility and expected return. So the optimal portfolio comes out like this with these allocations. And it's very important when you're making a portfolio to look at the correlation between the assets of the portfolio. So from which are represented in this correlation matrix, which will be available on the portfolio page at Token Metrics website. So from this matrix, correlation matrix, we can see that Cardano, Voyager offer good diversification benefits since they're negatively correlated to ETH and have a relatively low correlation to Bitcoin. Also, we can see that Luna doesn't really offer big diversification benefits. It's low, it has a low correlation, but it's a positive correlation with all the assets in our portfolio. So now we can see, oh, and also one thing to mention, very important, is that correlation changes a lot with time. And this is a 30-day correlation matrix representing the short and most recent correlation between these assets. So to have a better idea of why our optimal portfolio and why our model allocated in this manner, we can look at how the portfolio would have performed over the past 2 months. And just by looking at this, we can see that this portfolio would have outperformed Bitcoin and Ethereum by quite a lot, mainly due to Voyager's big rally and Luna and Cardano's good rallies as well. And this is ROI. So Voyager had a really big rally. But that being said, we can also infer that Voyager, Luna, and Cardano are very volatile and that they are contributing a lot to the risk of our portfolio. And that Bitcoin and Ethereum, relative to these other coins, have been low volatility and are considered the low risk assets in our portfolio. So that is why we can understand better why we have these allocations. For example, we can see that since Voyager and Cardano offer good diversification benefits compared to Bitcoin and Ethereum, the model likes them more than Luna. And also, given the fact that they are negatively correlated to Bitcoin, Ethereum, in addition to having high volatility compared to Bitcoin, Ethereum, it will also make a lot of sense to have a good allocation in ETH and Bitcoin, because it simply dilutes the risk contribution of Cardano and Voyager. And the main source of expected return would still be in Cardano and Voyager. Not so much in Luna, because Luna is not very diversified compared to the correlation with Bitcoin, Ethereum. And thus, this makes good sense. Now, in addition to that, we can go further in our analysis and not only look at the correlation between the portfolio's holdings, but look at the correlation of our portfolio as a whole with the market as a whole and some sectors in the market. So for example, here we can see the performance of our portfolio for the past month compared to the DeFi sector, compared to the total crypto market cap or altcoins market cap. And from that, we can see that our portfolio is relatively negatively correlated to the DeFi sector and has a positive correlation with the crypto market as a whole, but isn't very, very correlated. So that's a good sign. And this feature will also be available soon on Token Metrics. And the way it could be used very powerfully is when you look at this, you say, okay, we're not very correlated to DeFi. Maybe it would be a good idea to add a DeFi token into this mix. So for further analysis, you can start considering, all right, what if I want to add a coin to improve the diversification benefits? So to do that, you can look at the Token Metrics website where we give you the top coins in terms of negative and positive correlation to come up to decide which coin you would benefit to add to your portfolio in terms of diversification, especially if there's a market downturn that you are scared about or that you want to reduce your risk. So here I just came up with two examples, which is essentially adding a 10% allocation to Pax Gold or synthetics here. And you can really see how it improves the diversification of your portfolio in both cases. So you can leverage the synthetics as return if you believe it has a good expected return, and you can leverage the low risk of Pax Gold to diversify and have a good portfolio that could last during a market downturn. And thank you. I hope this video helps you understand the things to look for when you're constructing your portfolio and how to use the tools that will be very soon available on Token Metrics' website, like the technical indicator or the correlation matrices to have all the information you need to construct a good portfolio. And thank you. I hope you enjoyed it, and goodbye.